Welcome to TradeTheMBI.com. This is John. This reports for the 15th. Well, market feeling a little bit of retracement time, and of course, below the ABM yellow. Yeah, we look for the 76%. We had, short-term buyers pretty much fading off and shorts beginning their increase, and we were looking for that DO spread to finally cross over, and it did so intraday. It was pretty clean overall. It's just a recalibration from the exuberance. Now that some of the picks are coming through, there's a lot more controversy building around it. But, a lot of that initial excitement in that, as you start looking into the details of some of the things, it's going to be challenging for the market. Not as simple, boom, boom, because a lot of this is going to be more transitional, and that's going to create a lot of uncertainty for businesses simply because, they're not going to know which companies are tariffs. You're already seeing the trade. China, emerging markets are all suffering. Their currencies are all getting hammered pretty hard. Uh, Rightfully so, but is it a little early? Yeah, probably, until some of the details unfold. But from an NQ standpoint, likewise matching the S&P, so we got some congruency there. Finally, they're all back into alignment with each other, and I think that's a healthy thing. Filling in some of these positive extremes also good. So, you know, I don't really think it's a bad thing. I think it's just you're going to get more of this kind of back and forth, and particularly as it gets into some of the fights with what might happen with the Fed. Now, I think a lot of that's just going to be hyperbole. Um, at the end of the day, you know, that's what negotiation's all about. You give a dramatic proposal, and then you come somewhere in the middle. And Trump is, known for doing this. So a lot of that rhetoric is going to drive the news cycles isn't necessarily going to be relevant to what actually takes place. So, but it's unfolding very fast. Talk about being on top of the game. I mean, having the experience of having been there before, things are moving a lot quicker, and I think that's just going to be one of the realities of how the market is going to be affected by this because they're going to react to a lot of the different situations. When we turn to treasuries and we take a look, there's also that back and forth again. Obviously, Trump and now in this case the Fed wants a bit easier situation, and they think they have inflation under control. They really don't. We saw the numbers that came through were already higher, still seemingly a bit massaged, but that's probably going to change going forward. I imagine they want to make it look like things ended perfectly so that when the Trump side takes over, the real situation gets developed quickly, and it looks like it's all because of his selections and that kind of thing. That's just politics. But the reality is, if you get a deflationary situation, it'll be an interesting one how rates respond to that. But I think the demand for the deficits and that it's going to put pressure on rates to want to move higher. But as long as they're not, the only place to go is to the market or alternative spaces, which is where you're seeing your elevation Bitcoin and some of the others. Gold, not so much right now because deflationary setup for reduced energy prices, and that is definitely going to have its impact. But that's not going to change the devaluation situation. From an oil standpoint, here we're just soft in the middle tones. I think it's a little too early. At the end of the day, a lot of oil companies, though, it may sound great that oil gets put under control, but it's going to kill their massive gains, which, from an investor standpoint, yeah, not necessarily great for the stock price because you're not looking at these potentials of moving oil into extreme, 100 plus barrel range, that kind of situation. Um, Making a tiny recovery today after really being hammered, and probably it's the excitement of we were walking around the city here in Florence, and of course Joe Biden and a bunch of dignitaries are here, and they've closed off all the sections for all these motorcades that are running through. It's not really reported much, but and we saw him walk shuffling into the Palazzo Vecchio just yesterday afternoon. So that's where I was at. But that was kind of funny. But I would expect currencies are going to still continue to take a beating on this. And gold having filled in now pretty much all of its positive extremes. Healthy as that is now, still in a little bit of a weakness configuration, but it's going to start its bounce back. And that's really going to have a lot to do with where projections. I think you're going to get some wild estimates that they think that the tariffs and all these things are going to produce these massive budget gaps and things. I think it's just a bunch of nonsense because at the end of the day, what you're really going to do is you're going to see a slow shift towards labor being put back into regular expansion, uh, but not from a migration standpoint. And that's going to have a serious impact going forward. ETH, when we look at it, is pretty much mimicking Bitcoin at this particular stage, still getting close now to filling that gap. Intraday, we have some weakness building. So you can see after having the big run up, we're just basically filling back in. I mean, we had just so many positive extremes that all had to be taken care of. Just about finishes the last run before we get the initial breakout from the election. So all that's pretty clean. All the white MBI spikes indicating the return back to the 0 and percent Morganacci lines, and that's what we've seen here going through. And you can see even starting today, still more weakness with that MBI white lead, although it is getting a little bit lower. And now you've reached a point where minus 23 DOC, usually we get a degree of a bounce back from that. Intraday, yeah, it was just pretty much selling all along, and this is where that call buying has to be muted, so to speak. And then when they get an excitement of puts, you've got your next potential for a pushback up. And here in the European session, it's still rather modest. So overall, I think we're in that transition phase where we're going to begin to start seeing whether or not the real data numbers starting to be reflective of whether there's weakness or if there's a rebound from consumers. But seems unlikely at this particular stage, given the fact that inflation really still isn't stopped, albeit it maybe seems smaller from a percentage standpoint from the big run up. It's still running way over what their projections. And I don't think they really care so much about that. But the reality is they need to spur some kind of renewal and make things a little bit less expensive to try and stave off a deeper recession. That's the long and the short of it for now. As always, anything relevant, I'll put in the Skype chat. Have a good one. Trade well.